1.2. 1.2 desks factory completes the factory overhead cost note for 8 marks. That is 1.2.1. 1.2.1. 1.2.1. The factory overhead cost note. The factory overhead cost note. There are 3 manufacturing costs. We have the direct labor cost, the direct material cost, and the factory overhead costs. And these 3 costs, the total makes the total cost of production. The total of the 3 costs is the total cost of production. So right now we are doing factory overhead cost, where we record indirect materials, indirect labor, and all other factory expenses. So let us then go to our information for the desks. We are doing this factory overhead cost note for the desks. So if we are turning on page 5 of the question paper, page 5 of the question paper has got the extract of the pre-adjustment amount, and there is factory overheads here. We have indirect labor there, and there is also adjustments underneath, adjustment to factory overhead for desks. And the adjustments that are listed there is for water and electricity. There is an adjustment for rent, and also an adjustment for insurance. So indirect labor, there is indirect labor, which is also part of factory overheads, and the amount for indirect labor is 296,500. Indirect labor is 296,500. We are referring to the workers, money paid to the workers who are not directly involved in the production process. Because there is no adjustment to this amount, we are taking it as it is in the pre-adjustment amount, which is 296,500. We are also having depreciation of factory plant. Depreciation of factory plant. And there is no adjustment for depreciation of factory plant. This is part of factory overhead cost, and the amount is 166,000. And there is no adjustment to this amount. The following one there in information A is advertising. And advertising of 24,500. Advertising is not part of factory overheads, because advertising relates to the goods we are advertising. We are selling goods, so therefore this expense relates to selling and distribution. So we are skipping the advertising cost. We are then proceeding to water and electricity. Water and electricity. Advertising is just put there to just check if you have a clear understanding that factory overheads cost, we must only put in there the expenses that relates to the factory. Anything else should not be included in the factory overhead cost note. So advertising is not part of factory overheads, so therefore we have not included it in our factory overhead cost. So we have water and electricity, and the amount given here is 248,000. We are given 248,000 for water and electricity. And then there is an adjustment to factory overheads for desks. The first adjustment says water and electricity for February 2019, 18,000 must be taken into account. 80% is allocated to the factory, the balance is an administration cost. So there is water and electricity for February which must be taken into account, and that is an amount of 18,000. So we need to add this 18,000 here. The amount given which from the pre-adjustment is 248,000, and then there is also 18,000 that we need to add, which is water and electricity for February. But 80% is allocated to the factory. 80% of this expense is allocated to the factory, multiplied by 80%. So to get the final answer, So let us then check if we are adding that. Let me get my calculator. Yeah, here's my calculator here. Right, we have this 248,000 pre-adjustment amount plus the 18,000, 248,000 plus the 18,000 for water and electricity for February. That is giving us a total of 266,000, and 80% is allocated to the factory, multiplied by 80%, and this is 212,800. So let us then verify the amount again. Water and electricity is 248,000, right? And this plus 18,000, which gives us 266,000, and then 80% is allocated to the factory, multiplied by 80%, 0.8. That is 212,800. So water and electricity is 212,800. That is 212,800. Right, the following expense listed there in the pre-adjustment amounts for the factory overhead note is rent expense. The following one is rent expense, and there is also an adjustment to the amount given here. Rent expense given is 345,600. 345,600. The amount given is 345,600. And then the adjustment says rent must be allocated according to the floor area. Rent must be allocated according to the floor area. Factory is 810 square meters. And office is 180 square meters. And sales department is 90 square meters. So if we adding up all these square meters to get the total square meter, 810 square meter plus 180 square meter plus 90 square meters, that's equal to 1,080. The total square meter is 1,080, and the factory only accounts for 810. The factory only accounts for 810. So this is going to be 345,600 multiplied by 810 over 1,080. That's over 1,080 rent expense. You multiply by the factory square meter and you divide by the total square meter. So that is 345,600 multiplied by 810 square meters divided by 1,080. That is giving us 259,200. 259,200. We need to be accurate with our calculations. Please make sure that when I do the calculation, you are also doing it on your side there. That's multiplied by 810 divided by 1,080 equals to 259,200. That's for rent expense. Right, the following expense is insurance allocated to sales department. Insurance allocated to sales department is 12,600. But remember, our main focus is in the factory. So insurance that is given here is allocated to the sales department, which is 12,600. So let us then look at the adjustments and see how much must be allocated to the factory. According to the adjustment, 75% of insurance must be allocated to the factory. So the insurance that is given here, which is for the sales department, is 12,600, and we are told that 75% of this of insurance must be allocated to the factory. So you multiply by the percentage of the amount that we want and you divide by the percentage of the amount given. The percentage of the amount given is 25. There's 25, because if the insurance for the factory is 75% and then the balance applies to the sales department, it means the balance of 75% is 25%. It means that 12,600 for the sales department is 25%. So we need to multiply by the percentage of the amount that we want and divide by the percentage of the amount given. The percentage of the amount given is 25, which is 12,600, and therefore it's going to be 12,600 multiplied by 75 over 25. So 12,600 multiplied by 75 over 25 equals to 37,800. So our insurance is going to be 37,800. Insurance is 37,800. And then the last one is factory sundry expenses, and there is no adjustment to that amount for factory sundry expenses. So factory sundry expenses, we are taking the amount as it is from the pre-adjustment. Factory sundry expenses. Factory sundry expenses, and the amount given is 107,700. 107,700, and there is no adjustment to this amount. So we then need to come up with the total for factory overhead cost. So let us then calculate the total. The total indirect labor is 296,500 plus our depreciation of 166,000 plus water and electricity of 212,800 plus rent expense of 259,200 plus insurance of 37,800 plus factory sundry expenses of 107,700 equals to 1,080,000. So that is 1,080,000. So the total here is 1,080,000. 1,080,000. The total is 1,080,000. So let's just check, double check. First 296,500 plus 166,000 plus 212,800 plus 259,200 plus 37,800 plus 107,700. Yeah, 1,080,000. That's the correct amount for the factory overhead cost. Right, let us then go back to page 4 to read the following question. The following question, which is 1.2.2. The following question is 1.2.2. 1.2.2. That's 1.2.2. 1.2.2, it says calculate the total cost of production of finished goods. Calculate the total cost of production of finished goods. The total cost of production of finished goods will be made by direct material cost plus your direct labor cost plus your factory overhead cost. Factory overhead cost. Factory overhead cost equals to total cost of production. It is your direct material cost plus your direct labor cost plus your factory overhead cost will then give you your total cost of production. And looking at the information provided in page 5 of the question paper, your direct material cost is given for tests. Remember, we are still doing the test. The direct material cost for desk is given. It is 3,060,000. Direct material cost is 3,060,000. 3,060,000 plus, that's 3,060,000 for the direct material cost. The direct labor cost is not given, but the direct labor cost per unit of 160 is given. Per unit it's 160, but the total direct labor cost is not given. So because we are given the direct labor cost per unit, and we do have the number of units produced, which is 9,000 desks, so it means we just need to multiply 160 by 9,000 to get it direct labor cost. It says 160 multiplied by 9,000 to get it direct labor cost, which is 1,440,000. 1,440,000. How did we get it? It is 9,000 units produced multiplied by 160 per unit, which is direct labor cost. That is giving us 1,440,000 for the direct labor cost. And the factory overhead cost, we do have factory overhead cost, which is 1,080,000. 1,080,000. We do have factory overhead cost, and the total is 1,080,000, and it is taken from 1.2.1. So then the total cost of production will be 3,060,000. 3,060,000 plus 1,440,000 plus 1,080,000. 1,080,000. That's 5,580,000. 5,580,000. 5,580,000. So the total cost of production is 5,580,000. That is 1.2.2. And then the last question under the desk for factory before we proceed to chairs, there is the last question there under the desk for factory, which is 1.2.3. 1.2.3. The last question. The last question, it says, Sihle wants to produce an additional 1,500 desks while maintaining the selling price and cost. Calculate the additional profit he can expect. Sihle wants to produce an additional 1,500 desks while maintaining the selling price and the cost. Calculate an additional profit he can expect. So if Sihle will maintain the same selling price and the cost, it means we can be able to calculate the current contribution per unit. The formula of calculating a contribution per unit will be the selling price minus variable cost equals to contribution per unit. Contribution per unit. So the current selling price for desk given in information B is 750. The current selling price is 750, and the variable cost per unit for desks, the total variable cost per unit is 580. Total variable cost. Variable cost per unit, we have three there. We have direct material, direct labor, and selling it. We have 340 plus 160 given there, plus 80, which is giving us the total variable cost of 580. So 750 minus 580. 750 less 580. The contribution per unit is 170. So for each unit that we sell, we are able to get 170 towards our profit. So the contribution per unit towards our profit is 170. We are getting 170 out of the sale of one unit. So if Sihle wants to produce an additional 1,500 units while maintaining the selling price and the cost, it means the additional, we are asked to calculate the additional profit he can expect. The additional profit he can expect will be then, if the number of units is 1,500 additional units and each unit is giving him 170. So the additional profit he can expect to make will be 1,500. It will be 1,500 multiplied by 170. 1,500 multiplied by 170 equals to 255,000. And additional profit he can expect to make is 255,000. Right.